The CoinDesk Spotlight is brought to you by Nexo, the place to earn on Bitcoin, Ethereum, and more.
All right, lots of news out of Asia, including voting on a proposal to reimburse Mt. Gox victims begins this week. The draft rehabilitation plan to reimburse victims of the collapsed crypto exchange requires a majority vote from all creditors in order to pass by October. Joining us now to discuss is Bobby Lee, the co-founder and former CEO of China-based crypto exchange BTCC, and the founder and CEO of crypto wallet startup Ballet. Lee is also a member of the Bitcoin Foundation's board of directors and is the brother of Litecoin creator Charlie Lee. Welcome, Bobby.
Good morning. Thank you for having me.
Good morning. Good to have you as always. So, first off, are you a Mt. Gox victim? And if so, what are your initial thoughts on this draft rehabilitation plan?
So I am not. Fortunately, I didn't have any of my assets on the Mt. Gox exchange in early 2014. Yeah, so this has been a very long ordeal for the people who have their money tied up there, and I guess the value of Bitcoin having gone up, and given the fraction amount that they have fighting for, I guess there's some consolation, price if they get that spread out.
According to CoinDesk reporting, the total value of each claim is denominated in Japanese yen, with each Bitcoin being pegged at nearly 7,000, the rough price of Bitcoin when the civil rehabilitation began in 2018. And that's not the $37,000 price today, which must be frustrating. So are people being, compensated in only Zen or a mix of Bitcoin and cash?
Yeah, it's going to be pennies on the dollar, but it's still, they're going to get some money back as opposed to nothing, right? So the value, like I said, the value of the Bitcoins held in the Mt. Gox trust has gone up. So there's more money to go around, and let's hope it gets passed, and gets approved, and get the money out back to the people.
Meanwhile, the ex-head of China's digital yuan effort is saying that central bank digital currencies could operate on Ethereum, and that CBDCs will one day be more smart and not merely digital versions of cash. Sounds like the Chinese government might be willing to work with public blockchains.
I don't know. We'll have to see. The main issue with CBDC is that these are digital currencies that they control in terms of the the transactions, the clearing of it, and also the supply limit, right? So the supply limit, I guess, is very apparent, but it just really comes down to, so the best example for normal people is that bank accounts are account numbers that are assigned to you. We never get to choose our bank account number. However, with digital cryptocurrency, the private keys generate the account numbers for Bitcoin, Ethereum, and the private keys can be completely generated by a user device with no assignment from a central bank. So that's a fundamental conflict. The question is, are people allowed to create their own account numbers and have exclusive control of their private keys, or is it something that has to be assigned to you by the central bank? So, the proof is in the pudding. We'll have to see if these CBDC issuers eventually do move to the public blockchain and do allow real people or companies to create their own private keys through their own devices without being assigned.
Bobby, speaking of China, something that we alluded to earlier in the broadcast, we said that China is now allowing a three-child policy. It had spent years doing the one-child policy, of course, and then two-child about 5 or so years ago, and that didn't work. So what is it telling us about China's economy overall, and its future prospects, and what will that mean for crypto?
Yeah, well, I was going to short circuit to a thing about China is nothing is permanent, that all the laws and regulations can change, and they do change. The one-child policy is a shiny example where it's been that policy for decades, and then 5-6 years ago, they loosened it up to a two-child policy, now a three-child policy. So whenever I use that example, when people ask me, will China ever have cryptocurrency exchanges? The current answer is no. The regulatory agencies don't allow for that. And long term, I think there's a chance that they will allow for that. If the stars line up, so to speak. Now, when it comes to how does the three-child policy directly affect cryptocurrency, I think the how many child are allowed in the family, it's more about the population They certainly don't want to see a decline in population, which is why they're opening it up for more people to have more children. And I think even today, as a three-child policy, I think it's inevitable it's going to just be loosened up and not have a strict policy as well. I think the country has grown very much over the years, not just in population, but also in economic sort of might, if you will. So a lot of the old rule style enforcement stuff, including the migration plan where people are allowed to live. So China still has a hukou system where people are assigned a province where they are supposed to live in. If they move across provinces, they have to apply for the ability to move across borders, so to speak, within the country. And I think that system that system was really strict decades ago, whereas today there's more flexibility, there's more movement, and so on. So you'll see China continue to change in the coming decade to accommodate its growth and economy.
Bobby, China and crypto has been in the news a lot over the past couple weeks. I think you and I first spoke in 2017. You really know the whole history of this. Can you really break down in the most simple way what is new about these recent Chinese warnings? Because we've seen versions of this in 2013, 2017. What is new here? Because people seem to be having a hard time making sense of it.
Yeah, there is news. What's new is the intention to enforce. So let me repeat that again. They're having a new look at the cryptocurrency situation in China, more specifically mining, and also the legacy stuff, which is the trading, exchanges, the leverage trading, and so on and so forth. So the new aspect is they have announced their intention to really enforce it to a stricter degree, and this is the enforcement of what was on paper sort of issued out in both 2017, the September 4th document of 2017, as well as the December document of 2013. So again, China traditionally has chosen to be very sparse with its words and legislation, and then to use a control of enforcement to achieve their objectives, right? So
although they looked pretty strict.
Yeah.
Before, but I guess the other question is why now though? I mean, what do you think? Obviously this has been a continuum, but what do you think is the main motivator now for China to issue these warnings?
I think possibly the price. I mean, I ran an exchange for many years, and for a while, it was surprising to me that the price would be an issue, but apparently the price is a sort of milestone issue. When the price goes up a lot, they get worried. And I think the fundamental reason is not so much Bitcoin is expensive, but rather when the price goes up, it attracts a lot of traders. And when you attract a lot of traders, you can have a lot of FOMO, fear of missing out buying. I talk about it in my book, The Promise of Bitcoin. And when you have a lot of FOMO buying, what happens is inevitably the market can crash due to high volatility and people can lose their money. And when people lose their money, the consequence of that is social unrest and people blaming the government for poorly regulating this industry, people lose their money. So that's the thing that they're trying to avoid, the ultimately, which is people losing money, people getting hurt.
The question is, though, will it work, though? Because, like, in the past, Chinese crypto traders, better than anyone else, they're very savvy, right? They always find ways around all these regulations, and China's had kind of a string of crackdowns throughout the years. And, like, is this time going to be any different? Like, are we actually going to see a real effect on Chinese crypto trading, or are people just going to find other ways, to keep doing what they've been doing all along?
My theory, my thinking is that the regulators are not trying to prevent the existing crypto traders from trading crypto, because the existing traders, like as you have said, are very sophisticated. They've been trading for many years. They're comfortable using leveraged trading products, these derivatives, futures, contracts, and so on and so forth. However, I think you asked me, has it worked? Well, in some sense it has, because in some sense it has worked. And the reason I say that is because you look at the population, 1.3, 1.5 billion. The country as a population, the whole country has not gone on to trading crypto. Only a small fraction have. Now, that small fraction is a large number in actual number of people due to the large country and the early start. But in some ways, the whole country didn't get into crypto the way they get into stocks and real estate. So in that sense, maybe it has worked. I don't have the statistics, but in a different sense, it certainly doesn't slow down the price of Bitcoin, because Bitcoin price has to go up to where it needs to be to satisfy a global market for Bitcoin and cryptocurrency as the sort of global reserve currency that I talk about.